What's up, investors? It's the Russian dude. And yes, if you've been watching my previous video, you already know that in December there was yet another rate cut of 0.25%, which was expected but unexplainable. Why would they do it? And inflation is on the rise again. Well, because decreasing the interest rates even further will boost the inflation even higher. Yet they did it. And at this very moment, the interest rate stands at 4.5%, as you can see from this graph. Later on, Jerome Powell had a press conference where he was talking about the decisions taken, the path forward and things like this. And then he did mention that the inflation, we are kinda going towards our target price of the inflation, target of the inflation. Yet it still remains above our expectations, what it should be right now and in the future. This was one of the very first concerning signs, which made the stock market decline 3% on Wednesday alone. He also mentioned that most likely in 2025 there will be only 2 rate cuts of 0.25% each, and well, like everyone else on the Wall Street, like every single economic expert, everyone started saying like, yeah, we knew it, like we are absolutely certain that this is what would have happened. And they revised their expectations that, well, now 10 out of 19 of them, they also think that there will be only 2 rate cuts in next year instead of 4. What a surprise here. The Wall Street changed its mind in literally one day. But then Jerome Powell started to say even more concerning things, which I'm going to be very curious to see how the market reacts in the short term. He said that once again, since the inflation is above their target, they might consider easing the monetary policy, once again such as the ones as decreasing the interest rates so fast. The very first logical question which market participants started asking is economy is going through some very big troubles. And to answer this question, well, here is a summary of economic projections, who also revised their next economic expectations for the next 2 to 3 years. Here are their revisions. The interest rate, they thought that it will be at 3.4% next year, now they think it's going to stay at 3.9%, and all the way to 2027, when they thought it's gonna reach 2.9%, now the expectation is 3.1%. The unemployment, which more or less did not change, but there was still some adjustments. It was decreased from 4.4% to 4.3%, pretty much throughout these next 2 to 3 years. But the most concerning one is the inflation revisions, specifically the PCE. For example, for 2025 alone, they revised their conservative inflation expectations from 2.1%, which, to be honest, well, I don't personally think we're gonna reach this inflation target next year, but well, this is what the expectation used to be. And the new expectation is 2.5%, which, as you can see, is a pretty significant increase. Pretty much as expected, the inflation is on the rise. Jerome Powell does not know much what to do. He just decided to still do the rate cut because it was expected with 96% probability. And the very least statement he could have made is by saying that, okay, we're not gonna decrease the rates by the entire 1% next year, it's gonna be only a 0.5% decrease. Because yes, subconsciously he does acknowledge that the inflation is on the rise again, and this Fed pivot should probably pause, to say the least. Definitely not continue at the pace it is going right now. Well, there you have it, guys. If you enjoyed today's episode, please subscribe to my channel for more videos like this. Thanks so much for watching. See you on Monday.